Good morning, good afternoon, good evening, traders from around the world. It's Alan from Wall Street to Easy Street. Um, what we're going to look at here is we've had some questions come up in the chat room about trying to determine the direction we should be trading. Do we want to be looking for longs or looking for shorts? We want those high probability trades. And in order to get a high probability trade, we need to know who's in control. If the bulls are in control, we want to be looking to trade to the long side. If the bears are in control, we would want to be looking to trade to the short side. So how do we determine that? There's a couple different ways we can go about it. Before we start, the beginning of our trading day, we always want to take a look at an economic calendar and see what news is coming out so we don't get blindsided. We don't care what the news is. We don't care if it's good data, good news, bad news. We trade the chart. So what the data is doesn't matter. We need to know when. That's what's important to us. For example, if it was Monday morning, we would want to note the 10 o'clock news here. We'd also want to note, 21:45, we have some China news. Those are things we need to be concerned with. Also, we have a talking head here at 11:45, something else we need to be concerned with. They can have big effects on the market. So, you could be in a long trade, news come out, and all of a sudden you get a short spike and take you out of your trade. So we don't want to trade when the news event is being released. We'll want to hold off there, take a 5-minute break, whatever. So that's the first thing we do. We always take a look at the calendar. That needs to be like a ritual. Before you ever place a trade, look at your calendar. Okay, so now we know we have no news events going to come out and affect our trading for a little while. So now we want to determine what we're going to look at, which trade direction. So we currently take a look at the market. What we see here is looking at just our last couple hours here on our short-term chart. We can see that we've had higher highs, higher lows for a while, and the bulls have been in control of the market all the way up to about this area. From this point, we've had a high, we've had an equal high here, and the market's pulled back. So this is where it gets confusing, because from here to current, we see that the market's trending downward. We have a lower high, although it's kind of equal, but a lower high, lower low, lower high. So technically, the current market is pulling back here. So is it a pullback, or is it a trend starting? Because we want to trade with the current trend. So to get a better idea of which way we need to trade, there's a couple different ways we can do this. And really what it depends on is how much real estate you have. I run quad monitors, so I have plenty of room to put an extra chart up and leave up all the time. If you're trading off a laptop or you only have one monitor, you don't need an extra chart. You can do the same thing with one chart. So let's assume that most of you are trading and you only have one monitor. So the best thing we can do then is we can scrunch up our chart to get more data in. All right, so now what we look at is we can see that from this point all the way to actually here, the market's been selling off. So had we been trading during this time frame right here that I'm showing on the line, we'd want to be looking for shorts. But from this low, we see that the market has started to recover, that the bulls have regained control of the market, and the market's pushing higher. So if I was going to trade this current market, I'd probably be looking to trade to the long side. And I would consider this is probably going to be a pullback in a long-term trend upward. So here we can see bears been in control, bulls regained control of the market and started running it up. So let's mark that area on our chart. Roughly that area. So from this point on, our primary trade direction would be to the long side. Now, I use a longer term chart because I have the real estate available for it. But you can see, we scrunch up our chart, we see the same thing. So it doesn't really matter. If you want to use a second chart, you can. Or you can just scrunch up your short-term chart. Notice the lines on the chart. Let's see if I can get it shrunk down here. Sorry. Notice the lines are the same. It's a feature of NinjaTrader. When you put a line on one chart, it will copy over to the other charts of the same symbols. So even though from this point here, the market's been trading downward, we're still looking to trade to the long side because we see now that we, on our long-term chart here, or on our chart that's scrunched up, we can see that the bulls are in control of the market. So now we can move our trading chart back outward and know that we would want to be looking to trade to the long side. So now we're looking for long setups is what we'd be looking for, and not short setups, even though the market is pulling back. Now, something else I'd want to be aware of that I noticed, looking here at this chart, is I've got a fib level right here that I want to mark that on the chart. Because I would expect that probably this is going to pull back into this area where the Fibonacci algorithms are going to take over and probably start running the market back higher. That's what I would expect to see. Then I've got a 50 level that I need to be concerned with. 500 level. Those are all going to be in play. Maybe the market will trade that high. I don't know. So those are all levels I need to be concerned with. So now we are set up here on our trading chart. We know we want to be looking for trades to the long side. Those are going to be our high probability trades. And we know that at this level, here is where we'd expect our fib bots to come in. So I would expect this to probably pull down into the fib bot area. Now we'll speed the market up here. Remember, this is market replay. This is not live. So now we're looking at anything that's going to signal that this pullback would be over and a trade set up to the long side. Speed the market up here so we don't run too long on our tape. All right, you can see we're just about into our FibBot area. So we get into this area, we'll want to see the market turn. I was on vacation this week, so I'm not sure. I didn't watch the market. Speed this up here a little bit. Now I would probably be comfortable taking a trade roughly in this area to the 50 level if we start pulling back up. Probably anything in there. I'm kind of like got this area here where we had resistance. So if we break that area, I'd take this as a 50 magnet trade. Let me mark that on the chart if I got time. So this would almost be like a range break, kind of sloppy. So while we're waiting, we can see, scrunch our chart back up again. If we were to grab our trend line, note how it pulled right back here to our trend line area as well. So I'm going to go along if I break this area here as a 50 magnet trade. I actually have a small block here, maybe forming. Could probably trade this to the long side as a block. So that would have been a valid entry right there, a block. We do have this near-term resistance we'd have to worry about. So if I block this trade, I would probably be looking to get out if the market stalls right here. Remember, we don't take, we don't want to trade at support and resistance levels. We want to trade to them, but be out before we get there. So if I block this, the first little bear candle, I'd be getting out. I'd take 2 or 3 pips, whatever I could get out of it. My trade, though, I want to trade as a 50 level trade if we get above this. But I would not have had an issue taking that block and just trying to grab 3 or 4 pips out of it. I know this is a futures chart and it's ticks, but I'm used to saying pips.
Order filled.
I would probably want my stop to be below that little block area. And probably want to get out.
Target filled.
So there we go, $125 trade. And all it took was some patience and determining who's in control of the market. We knew that the bulls were in control of the market. We waited for them to take over again. And there you go, a high probability trade. So, of course, this is market replay. It's not live data. But that's exactly how we trade, and we do this over and over. We sit on our hands, we wait, we determine who's in control. Once we know who's in control, we look for a valid setup and run with it. All right, so let's take a look and see what we have now. So you can see, even though when we started out our day, it looked like, remember, it looked like we were trending downward. But by scrunching up the chart, or by using the long-term chart, we could clearly see that there was buying pressure, that the bulls had regained control of the market. So we waited, we got our valid setup, took it, high probability trade. So I hope that'll help some of you out a little bit. And if you have any questions, of course, come by the forum, and you can always post your questions and comments here. All right, y'all have a good trading day and good trading week, and I'll try to work on some more videos like this if y'all find them helpful.